what's the difference between a good mortgage advisor and a not so good mortgage advisor?
If you go on social media, you open TikTok today, right? So every other ad will be a mortgage advisor ad. And all they're talking about is, oh yeah, I'm going to get you this cheaper rate and that rate. I'm going to get you 1% cash back. All they know is talking about the cheapest interest rates. But they don't talk about how you can pay off this 30-year mortgage in 10 years, 15 years, or build your wealth through other asset classes like KB Saver or buy investment properties. But what investment property, right? Is it a right investment property or you just like buying anything? My priority has always been quality over quantity. For us, is like we pick and choose our client base. We want to be there for long term because it's a long game for us.
Hello and welcome to another episode of Ways to Wealth. Today I'm joined by Sanjeev. Sanjeev, why don't you give us the too long didn't read on who you are and how you got here?
Thanks, Charlie. Thanks for invite. Hi, I'm a mortgage broker or mortgage advisor nowadays because we can't use the word broker anymore in New Zealand, so it's like mortgage advisor. So I've been in the game for about 5 years as a mortgage advisor. So I run a franchisee under Loan Market brand down in Manukau, South Auckland. Prior to becoming a mortgage advisor, I used to work with Westpac.
Yeah.
So worked there as a home lender. Wow. And then I moved to TSP and then worked in the broker space. Yeah. I used to assess broker applications, and then I got the opportunity to become the business development manager with them. Okay. That's where I used to go to a lot of mortgage brokers here and there, and then they all started pitching me saying, why are you wasting your time with the bank? You should be a mortgage advisor. So that's when, like, long story short, back in, I think, end of 2020, that's when I took the leap of faith and become a mortgage advisor myself. So started with as a one-man band, and now we've got a team of 6. Wow. Yeah, so if I see what we have achieved in the last 5 years, so in 2022, our company or my business was the new brokerage of the year for whole New Zealand. In 2023, 4, 5, within the last 3 years, I've been the top advisor for New Zealand in the last 3 years. And I've also, I think in 2022 and 2024, I was one of the fastest growing mortgage brokerage. Yeah, and then long story short, nowadays we help probably hundreds of first-time buyers or investors to get onto the property.
Okay, cool. Wow. So you really kind of got in as well to business ownership at an interesting time.
Yes.
With lots of different challenges, but also a huge opportunity and kind of headwind, I guess, at that time as well, right, in 2020. So you had a lot of experience at the banks. You saw how the lending process was done, and you were on that side of the table. Mm-hmm. And then you were building a relationship, I guess, with a bunch of advisors, mortgage advisors.
Yes.
And they were like, hey, this is a fun game. Why aren't you doing it?
Yeah, the funny thing is, like, when I got into the business, I had absolutely no network at all. Mm-hmm. Because those brokers, they're not going to become your client because now they're competitors, right? So all of a sudden, took a leap of faith, and I didn't even know where my first client going to come from, right? Because I didn't have any network. Because during my years at banks, I have never faced a client. Like, everything was done over the phone, by the internet, emails, and all that stuff. So I didn't have that network, or those clients were through the mortgage broker. So I didn't have that direct connection. Yeah. But long story short, we help one person, and they will refer to 2 other, and then it just multiplies from there. Yeah. And then rest is history.
And so you were kind of not as customer facing, I guess. It was a different type of customer when you were in the bank. You had a different customer, I guess, in a sense.
Correct.
And then when you came out and went on your own, you didn't know how you were going to grow your business. No. And you hadn't actually grown a business before, because I guess from a bank's infrastructure perspective, they're the growth machine, aren't they? They're bringing you the business in a way.
Oh, exactly. Like when I used to work at Westpac, it's like a massive, big lending machine. Every day you just open a portal and then you'll have hundreds of loan applications sitting there. And now you're on the other side. And the other funny thing is, as a lender, when you are making the decision on behalf of the bank, you can possibly approve the whole deal within half an hour. So I used to give people a letter of offer in hand within half an hour, 45 minutes. The whole application will be done, right? But nowadays we have to hunt the client first of all. So you have to attract people to come to your door instead of the bank. And on top of that, you have to prepare all that application, send it to the bank, wait in the queue for a few days, and then the bank picks up the application. So that delay is there. Yeah. But obviously, more and more clients are choosing the advisors over the bank nowadays.
Right.
So which has actually worked in our favor. When I started the business, again, I didn't know we're going to grow that fast. But, if you're looking after your clients, they look after you as well.
Right. Can you talk a little bit then about that, what you did? Because I guess you mentioned in the intro that you had won a lot of awards, and they're kind of usually recognized around growth and business growth, right?
Yes.
And service and reputation, etc. So you have obviously gone and executed and grown the business quickly, and also half of it was in a good market and half of it was in a terrible market.
Yes.
So you've got to live both sides of it, and you would have been scaling up in a good market, and then you had to potentially adjust. So what were some of the strategies you employed, and what were your challenges when you first started, and how do you think that you managed to build that initial momentum?
When I resigned from my job, right, so the last job I had with TSB is a business development manager, I had to give 8 weeks notice to my manager. So I handed over my resignation, and first 4 weeks, he didn't even pass that on to HR. He thought I might change my mind. And then 4 weeks later, we had another catch up. He's like, are you sure? Like, you're going to get pay rise. This is a very comfortable job. We are in COVID lockdown level 4. People are losing jobs or scared of losing jobs and that sort of thing. Are you sure you still want to do it? So yes. And then one thing he said to me, which is still stuck with me, is like, I'm proud of you. It's like, why? So it's like, because you are not scared. Like, you're going to do well because you're leaving this comfortable job, which just like a lot of people, it's a dream job for them, right? So he's like, okay, I'm proud of you. You're going to do very well when you get into there. At least, even if you don't do well, you won't have a regret that you haven't done it sooner. Right? So that's what I did. So left the job. But then first 3 to 6 months was a little bit of a struggle because every now and then you have COVID lockdowns and whatnot. But then I was fortunate enough to connect with some really good referral partners at the beginning. So I used to be connected with our Waypoint office in Manukau, Menureva, that sort of office. So these guys helped me a lot at the beginning. Obviously, someone came out of nowhere, and then we got that support in the mix as well. So they helped me to start the journey. Plus, we had a bit of a social media marketing as well. So I was posting photos with my clients on social media. Someone will see, oh yeah, that's my cousin. You help him, or can you help me as well? So it just like snowballed from there. So it worked out really well. And then asking the customers for referral, that worked in our favor as well. But you can only ask for referrals if you've actually done a good job. For us, the focus was giving the right advice rather than just talking about the interest rates and stuff. So that's what resembles with a lot of people, and they will send us the like-minded sort of a client base as well. So 2021, peak of the market, there was a time when I would get like 80 to 100 phone calls in a day because agents were referring us or the clients were calling us from social media or Google or where not. But then comes like end of 2021 when the interest rate started going up. 2022 market started going down. A lot of mortgage brokers were losing probably 40 to 50% of the business because there were not many buyers in the market. However, during that period, my business grew by 300%.
Right.
Because we were not relying on just Auckland market. So our client base was like throughout the country. So we had a lot of clients from Hamilton, New Plymouth, Christchurch, pretty much everywhere. Nowadays, everything is technology based. So
you've invested a lot in that process of getting people from anywhere in New Zealand.
Exactly. Yeah, so rather than that's the beauty of being a mortgage advisor versus a real estate agent, for example. So I'm not tied to an area. So we can probably have a client like up north versus Invercargill, anywhere, right?
And did you implement that externally, or did you build that functionality internally in your team?
I didn't have to reinvent the wheel. Like technology was already there. We were just running some basic Facebook ads, for example.
Okay, so that was your focus. Is that still your focus today?
Yes.
Okay.
So say about 3 years ago, a lead would cost me probably $2 to $5 a lead. Right? It was really, really cheap because nobody else was doing, or only a few people were doing it. And then within the next 2 years, everyone started doing it. So now the lead cost quite a bit. And we have built enough database that our existing client base serves us well.
It's actually serving you.
Correct.
On basically refinancing and refixing and stuff like that.
Yeah, or they're referring other people.
And right, yeah.
Yeah. Totally. So about a year and a half, 2 years ago, we don't have that very wide relationship anymore. So I'm not tied to any real estate agency. So we don't have many real estate agents that refer to us, or we don't go to sales meetings and stuff anymore. But that has helped me a lot at the beginning.
Yeah.
Even now and then, like we have that relationship.
Was there a commercial relationship there for you between?
Sort of, yes.
Sort of.
See, there's
softly.
Yes. I mean, again, it's a give and take sort of a relationship, but you don't always win. So
right.
Yeah. So sometimes you just gotta take a step back. So I was expecting my business to drop a little bit, which it did, but then we bounced back like very short, like soon as well. Yeah. So sometimes you need, you don't want to be stuck in a comfort zone. Yeah. So sometimes you need a bit of a push, which always has worked in my favor somehow. Sometimes in the moment you might think like, oh yeah, everything is against you, but then you just give it time, you just do your best, and it actually works in your favor.
Yeah, for sure. So when you've kind of, you've cracked the sales side.
Yep.
What's the difference between a good mortgage advisor and a not so good mortgage advisor?
If you go on social media, you open TikTok today, right? So every other ad will be a mortgage advisor ad. And all they're talking about is, oh yeah, I'm going to get you this cheaper rate and that rate. I'm going to get you 1% cash back. I'm going to get you, I don't know, whatever. All they know is talking about the cheapest interest rates, right? But they don't talk about how you can pay off this 30-year mortgage in 10 years, 15 years, or build your wealth through other asset classes like KiwiSaver or buy investment properties. But what investment property, right? Is it a right investment property, or you just like buying anything, right? So that sort of thing. For us, is my priority has always been quality over quantity. Because other people will be like, oh yeah, whatever, we want to get it done. For us, is like we pick and choose our client base so that we don't have many, clawbacks, for example, right? So those people, they come in very quickly, they do really well, but then they vanish from the market within 2 to 3 years. Disappear, right? Because they're finding those shortcuts. For us, is like we want to be there for long term, because it's a long game for us.
And, you mentioned that you've gone from just you, I'm assuming, to...
team of 6 now.
6, including yourself?
Yep.
And how long before you could pay yourself? In the beginning?
In the beginning, it was okay. It wasn't too bad. So yeah, about a couple of months. So obviously, the thing with the mortgage broker business is like you have to build a pipeline, right? It doesn't just come right away. Because if I'm meeting a client today, you've got to do all the paperwork and get an approval from the bank. That takes like 2 to 3 weeks, first of all. And then after that, the client might take 3 months to find a property. Yeah. You don't get paid until the loan settles. Yeah. Right? So yeah, first couple of months were a little bit tight. However, I was ready for it anyway. But then when your first commission comes in, you will never forget it. Yeah. Right? When I got paid, like after 2 months, that 1 month worth of commission was like probably worth half my salary.
Yeah.
Right. So that's how much money you can make like if you are good at what you do. Yeah. And then like when you look at it, there was a time when like within 6 months, I just pretty much tapped out. I was like I can't grow my business anymore. So now like I need a helping hand.
New pain points in the business. So 6 months. 6 months.
Yeah.
You were like, I can't. Not burning out, but you had no more time. How did that affect you?
Yeah, because I had aspirations to grow, because again, like I've always been hanging out with the right people. So I'd never hang out with people who are doing less than us.
Right.
So it'll be like, okay, how can I be that number one guy or number two guy, whoever that is, right? So we always look onto the top guys out there, like how they are doing it. So I started doing it. So I was probably writing around $2 to $3 million in lending, and I was like, I can't do it anymore, right? Because I want to talk to new people, but at the same time, I have all this paperwork to do, which I don't enjoy as much versus like talking to people. So that's when I hired my first person.
And what was that role? What did they do?
So they were the loan writers for me. So they will help me with collecting the data, putting the application together, write the diary notes and stuff, and then submit the application to the bank. And then in between, if there's any back and forth with the client, they will help me with that. So I hired that person, and that changed my life. Our business tripled.
Right.
So I was worried about paying someone a salary because it was a brand new business. I didn't even know like what I'm doing. And all of a sudden, like as soon as I hired that person, our revenue tripled. I was like
almost immediately.
Yeah, straight away.
What sort of like entry, what sort of level person was that? Like what's this kind of sort of salary range in that sort of hire?
I think she started with about $60,000 because she was pretty new. She didn't have any past experience, nothing at all. But then I molded her
experience as well.
She did need that, but then exactly.
So basically, collaborate with her. She must be extremely organized, and basically that's where you got the real benefit.
Exactly. Yeah. Exactly. So she was really, really onto it. Like when she joined me, I had probably 10,000 emails unread in my inbox because as a mortgage broker you get a lot of emails every single day. And then the first job she did was like just cleared all my emails and then managed it, like created those in different folders and all that stuff. So really, really helpful for us. And then she obviously when she started with me, I was like, look, just make as many mistakes as long as we can manage those mistakes. Just put the application through. She was doing all that. So within, I think, about 4 to 6 months' time, she was like pretty much pro in lending. And then that's where the next phase started. I was like, okay, how can we instead of writing only 2 million a month, can I do 10 million a month? And we started hitting 10 million a month, right? So we were going really hard. And then we're like, okay, now we're going to hire one more because she just tapped out.
Was that, say, more advisor side then at that point, or was that more administration?
Still admin, because I wasn't ready for an advisor at the time just yet, because we had like limited sort of leads coming in. So I was like, okay, if I can hit that big number, I probably will look into advisors later on. But at the moment, I want to hit those numbers if I can. And that's what we did. So we hired a second person.
How many leads were you generating a week at that point?
At that point, because obviously I was linked with the real estate agency as well. So there were like a few leads coming from there, probably around 20 to 30 leads coming from there. But then the conversion rate was really low. So you're probably looking at about less than 10% sort of a conversion. But then at the same time, we were spending a lot of money on Google ads, Facebook ads, and that sort of thing. And then I'll probably have 100 plus leads.
A week?
Weekly, probably, around 30, 40 leads. Yeah,
nice.
Yes. So, but then again, you play with the volume. So you either can chase like every single lead that you get, or you play with the volume. So at that time, like volume was my thing. It's like, I just can't be bothered. Like, I just don't want to chase people. We want to attract people rather than chasing people. So for us was like, I'll make a first phone call. If they pick up, that's fine. If they don't pick up, we'll send a message or an email. If they reply, we'll look after them. If they don't, I just can't be bothered. Just move on to the next.
Do you think that's really served you, is like moving on from leads that just are not there?
Of course. Yeah, so that's one thing I learned from someone else. Like initially when I started the business, I was like, oh, whatever. Like someone will give me a lead and then I'll drive 20 kilometers. Like you spend so much time in traffic, 3 hours wasted in like back and forth in traffic. You get to someone's place, to find out what they want or how can I help them to buy first home. And then you find out, they got 6 kids, all on benefit, no income, no deposit, nothing. They just wanted to know how it works. It's just waste of my time, right? So that's when I learned really quickly. I was like, look, nowadays, even after that, like, it's been probably, 2 or 3 years since I've been to anyone's house. So I don't go to anyone, but I had, Just give me the numbers over the phone. Takes me 2 minutes to figure out whether or not it's worth it. And then we send the online application, because everything can be done online. Or if you really, really want to meet us, come to our office.
Yeah.
We'll meet you there, right? Okay. Because a lot of time you'll find out, I mean, not everyone is like that, but then a lot of people, they just don't want to admit their like, I don't know, their mistakes, for example, or they don't want to, they just want to prove that they are better than anyone else. So you go to the house, like, the chances are like 80% of the time they don't have enough income, or there's something tricky about the deal.
Yeah.
So that's why I usually don't go. It's like, yeah. Or people will call you and say, hey, I only want to meet you on Sunday, 7:00 in the evening. I was like, nah.
Yeah.
Unless you came through a good referral source. Right. If an existing client referred you, then I'll do it. Otherwise, no. Why can't you come on between Monday to Friday, like, 9 to 5 or 6 or 7 or whatever? Because then they'll be like, oh yeah, we're working. So okay, so do I.
Yeah.
So that sort of thing. But it's not for everyone. But then most of the time, if a client refers a client, then I would love to catch up, right? But then if a random person comes up and then they don't want to give you any information over the phone, I understand if you're a politician or a rugby player or whoever, it's sensitive information, you don't want to show me your contract. But if you're just like a normal Joe blog, what's the problem? That sort of thing. So for us nowadays is like, how can I save my time so I can focus on the right things rather than just like chasing those leads?
Yeah, that's really good insight. I think that's cool. So, you're working on a business that relies on a lot of volume.
Yes.
And you have a team of 6 and you're running Facebook ads. So cash flow is a thing that every business owner has to manage. It's one of the most difficult things to manage.
Yes.
And how have you navigated that? I mean, you came from the bank, so you were well-trained and well-versed in kind of that kind of traditional finance lens, so that probably helped you. But what was you felt ready for it and it's not been an issue, or what's been the kind of...
Yeah, because when I started the business, I didn't know like if I would have a connection with the real estate agency at the time. So the whole plan was, okay, I'm gonna do something different, and the only different way was because I'm not a big networking guy. I don't have any BNI groups or any like big friend circle, things like that. I'm a bit of an introvert. Yeah. For me, it was like, okay, what can I do differently to generate that business? So we were running that Facebook ads at the time. Would not cost as much. So I read a book once upon a time. There was some marketing guy in Australia. So in that book, there was a line about Warren Buffett. So Warren Buffett makes 20 cents on a dollar, and he's happy with that. He doesn't want to make more than that. So then I was doing the numbers, okay, because he's playing with billions of dollars. For him, like 20 cents on a dollar is a huge amount. But what if I can just double my money or triple my money? It's like going to a casino, putting $100 and getting 200 back. Yeah. It's a no-brainer, right? So for us at the time, like when I started doing it, a lead would cost me, say, even if it costs $100, but if I'm making $1,000 commission, it's a no-brainer. So you get 10x back. So at that time, I think it was a second year in business for me. Well, probably I put $30,000 on ads. Yeah. But I've got $300,000 worth of revenue over it. Yeah. Right? So when you multiply that, you 10x your money. Why wouldn't you?
Right, and your return on the cash is fast, and of course, relative to like a software business or a business like Acuity or a startup where you're building kind of recurring revenue over time.
Yes.
And that critical mass.
Yep.
You kind of can run that game with ads a bit better because you get the feedback loop. We get that payback within multiples on what you put in back. Shortly after.
Exactly. So for us, it was like the volume game at the time was like, okay, I just can't be bothered like chasing those basic leads. I would just keep going, like go hard. But then the one mistake I made at the beginning, I wasn't catching up that data. Okay, so I'll just make a phone call. If they don't pick up, just move on to the next. I wish I would have saved all those numbers in a CRM system and then could have retargeted them because I didn't know. I didn't have any marketing guys, so just doing whatever, right? So we're just doing experiments.
So you guys do retargeting now?
Yeah, a little bit.
And you do it internally?
Yes.
Oh, cool.
Yeah, because like if you, for example, like all these leads that come through, we put it in a CRM system now, and then we send out monthly newsletters and stuff. So every now and then some random person will read it and be like, oh yeah, I keep getting your newsletter. My daughter wants to buy a house. Can you help? Or I want to upgrade my house. Like, what can you do for us? That sort of thing. So every now and then, yeah, we get leads out of that.
Yeah, cool. So, you've been building this business in New Zealand. Did you always think you wanted to be a business owner from like young? Was that something that you always thought about?
Yeah, it's a funny thing. Like I came to this country about 17 years ago. Yeah. And then back in India, I used to be a carpenter.
Right. Oh, cool.
I was studying economics.
Yeah.
And at the same time, I was doing the carpentry. So completely different things. But then when I was learning carpentry, I wanted to be the biggest carpenter in my town. Okay. So that's why I was learning it, because I just like creating things.
Yeah.
But then somehow I ended up in New Zealand. Right. As a student. Yeah. So I came here on a business studies because I was still studying economics.
Right.
So when they started the course, back in the days when you come here, you could actually change your courses. Like you can take admission in some other, you just pay a penalty fee and then you can move on to the next. So I came in 2008, right in the middle of GFC and all that. So I went to MIT in Ottawa. I was like, hey, I want to be a carpenter. Can I get admission in carpentry? And then someone from there advised me, it's like, no, I don't think it's a good idea. I was like, why? It's like we're in the middle of GFC, right? Global financial crisis, and New Zealand is such a small economy. It's not going to recover for another 5 years or 10 years. You're just wasting your, like, why would you go into carpentry when everyone else is suffering or people don't even have jobs? Right. And that changed my whole life, right? So, and I was like, okay, then I give up the carpentry. Let's go into business studies. So I was studying business and I started working at a gas station. Yeah. Right. So from that gas station, I was always like, working hard, like I was doing night shifts. But during those night shifts, I wasn't just, looking at my phone. I will read all the whatever paperwork was there. And then during my free time, I'll go to the store manager and say, hey, look, I've got my day off. Can I learn the back end of the office from you? You don't have to pay me. Okay, I'll do all the stock takes, everything for free, but I just want to learn. I want to grow. And I wasn't the sharpest person, but I was the hardest working. So you'll be like, yeah, why not? Like, you're coming for free, just learn. Yeah. So I was learning all that stuff. And then fast forward again, opportunity came when that franchisee or the whole gas station system was sold to like a private guy, right? Yeah. But I was ready for it. So got in there, the private guys hired me. They fired all the old guys because they were probably costing them more. So within a few months, I got an opportunity where the store manager went on leave for a month. I'd be like, oh, can you manage the store? So yeah, I was waiting for this, right? So I got the opportunity to manage that store. And we grew the profitability like really fast within a month. And then they were like, what the hell did you do differently? Why our sales are so high now, or the revenue or the net profit has grown? So I showed them what I was doing. So then they gave me the opportunity to manage a couple of stores for them. And then from there, they helped me to get my residency as well. So got the residency as a retail manager and stuff. But then within a couple of years, I was like, look, now I'm getting stuck in the comfort zone again. I need to do something different. And I've been an introvert. I had to push myself. And I was like, I need to go into sales. And I ended up getting into FMCG industry. So I was salesperson or like territory manager for a pie company. So we were selling like gourmet pies to supermarkets. Yeah. So I was looking after all the supermarkets in Auckland region. But within 6 months, that guy decided to sell the company. And then he made the whole company redundant. And then I was making a lot of money or bonuses every month in Auckland. But then they were like, because we have to do the whole company, so we can't do it. And I was like, okay, that's fine, no problem at all. So I left that job. And I was looking into same sort of a role, But while I was looking into the role, I was like, oh, while I'm sitting at home, why don't we do some temporary work? So we ended up going to a company called Salmet. So they used to do temporary recruits for other companies.
Yeah.
And at the same day, I had an interview with ANZ Bank. Right. So both interviews went well. Got home, and my wife was like, which one do you want to go to? I was like, whoever will call me first, I'll just go with them. Salman calls me at 7 o'clock in the evening. He's like, hey, this is 8 weeks contract. We don't know what that is. Oh, not even 8. I think it was 5 weeks or something, right? So they hired 40 of us. 5 weeks contract. Can you turn up at Westpac tomorrow morning, 9 o'clock? I was like, what? They didn't tell me anything about the role when they interviewed, right? So we had a group interview, and they didn't say anything what the role was and whatnot. It was just a customer service 5 weeks contract. So, okay, that's fine. We'll turn up to Westpac. So apparently, Westpac hired about 40 temporary staff just to talk about what the benefits of the credit cards are, because Westpac took over Air Points on the credit card at the time, right? So BNZ used to do Air Points, but then Westpac took it. And a lot of phone calls were coming in. Okay, yeah, I want 8 points on my card. Like, what's the benefit? Like, how much the fee is and all this stuff. So just temporary basic stuff. So we were doing it. So 40 of us. And then I got a phone call from ANZ the next day. Hey, congratulations, full-time job, permanent salary, this is. And I said, no, because I was committed to the other one. I was like, oh, no, I didn't want to go to banking anyway at the time. I wanted to be in the sales. So I said no to ANZ. But then with Westpac, we finished that contract with 5 weeks or so. But then during those 5 weeks, I wasn't the sharpest either. Again, but I was working hard. Was on the phone till 5 o'clock or whatever on the dot. So they had 2 vacancies. So out of the 2 vacancies, so out of 40 of us, when we applied, 2 of us got the job. So that's what changed my whole trajectory.
Okay.
Pretty much. So we go direct entry into lending, learned all that stuff. So about 3.5 years later, then I moved to the other one.
Right. And then, so you knew you wanted to do something. You've always hustled and wanted to progress and better yourself.
Yeah.
And is that for any specific purpose?
Yes, because funny thing is I always wanted to be in a property game.
Okay.
I couldn't go directly into it. Like, I didn't have the money to do developments or buy those properties to flip in and stuff. I was like, okay, let's do it through lending, for example. So I became a good lender at the banks, and then that changed into a business. So now we got a business where it's like my baby, for example. So we're building that up. So maybe in 10, 15 years time, like if we build enough trail and whatnot, and then maybe we'll flip it or I'll pass it on to my next generation. Right? For us, this has allowed me to do a lot of other things. So diversify my investments. So we bought properties. We have a bit of money into, like, say, stock market or a bit of crypto and whatnot. But if I'm sitting in a basic salary, these things can't be done.
No, it's really cool. I mean, that's what Acuity believes in. Like, our vision is that we believe that everyone has the right to build wealth for themselves.
Yes.
And have the freedom to choose how they get there.
Correct.
And I think what's cool about your story is that, you have basically been intentional about making progress, not necessarily this dream outcome, even though obviously you want to succeed, but in the pursuit of bettering yourself.
100%. Because someone told me once, like, if you're not growing, you're dying. So, there's no other choice. Like, if I get into comfort zone, I'm like, I'm okay with whatever I'm doing. Like, I don't want to learn new things, or I don't want to grow my business. Someone else will come in and then you're gone.
Yeah, for sure. So, like, you're just you're going to use this business as a vehicle to basically diversify your wealth and set your next generation up?
Yes, and a bit for my own retirement as well, because I don't want to work till the age of 70, for example.
Right. Looking to retire early and have a diversified set of income streams, and that may look like either exiting your business or kind of continuing to build the business and potentially
have a passive income
from that.
It's not just about my own income sort of thing. So we also want to help a lot of people, because when I was at bank, like I could only help a certain kind of people, but now we got so many options. It's not just one bank's policy. If one bank's policy doesn't work, we have 20 other or 30 other lenders, right?
Yeah.
So we helping a lot of people who are building that network with us as well. So, it's not just me growing, all the clients are growing with us as well.
Yeah.
So rather than taking 30 years to pay off this mortgage, why don't we pay it in 10 years or diversify your investments and stuff?
Cool. And is there any other kind of like passions you have outside of the business that you kind of engage in, or are you mainly focused on just the business?
At the moment, I just like, I don't know, like I'm not a multitasking guy. So at the moment, the whole focus is on business. So we're not getting into anything else. So every now and then we do some charity events, etc. Or just go for long walks with my dog and stuff. So, but like I'm not a very, I don't know, like I don't have a very big network as such. So,
cool. So today it's going to be the rate cut when we're recording. Obviously, this will come out afterwards. But you were talking about some of the dynamics, and you started to ask questions about the US markets as well. As I mentioned that I mainly focus on rate events in the US rather than New Zealand. But I have had a ongoing fascination with the duality between rates in the US and New Zealand, and how it affects, your ultimate buying power globally.
Yes.
Your actual relative wealth against everyone else. And I think that's a really important topic that we do need to actually address in New Zealand.
100%. That's something I'm trying to get my head around as well. So that's why we're here. So so tell me about like what's the correlation between what US is doing versus what's happening here?
Yeah, so it's fascinating to watch, and we're watching it unfold, in real time. I guess, what you see similarities between the two because they're culturally aligned and they're connected. But the great thing for the US is they get to export some of their cost of printing money to everyone else because they're the global reserve currency.
Yep.
And because so many assets are settled in US dollars, gold, Bitcoin, oil, you then have this kind of natural benefit of being the reserve currency. But what you're seeing is a de-dollarization.
Yes.
So people are moving out of the US dollar ultimately, but then into assets that may be settled in US dollars. So Bitcoin, equities, gold, silver, etc. Right? Now, what you would think is, does that mean then that the New Zealand dollar is getting stronger against the US dollar?
Yeah.
But it's actually the opposite effect because even though there's a lot of there's a deficit in the US and there's a lot of basically natural kind of, inflating the market in some senses, they have a very dynamic economy that really keeps their GDP growth very, very nice. The capex on AI has been a huge benefit for their GDP. Yes. So under the hood, there's a lot of similar issues around employment and the labour market as there are here. The difference is that we had nothing else other than property when we went into this interest rate hiking season. And I observed that there was through that 2021, 2022 era, less internationals were interested in New Zealand as a destination.
Correct.
And people in New Zealand have decided to move to better opportunities.
Yes.
Which means that New Zealand has to continue cutting rates, despite that actually creating a lot of inflation for consumers here because we buy our subscriptions in US dollars, we buy the gas in US dollars, we're all buying US equities, it seems. Like if you look at Kiwi savers, they're very exposed to US dollar assets, you know, so
Correct.
there's a heavy weighting into the US dollar, which creates a little bit of an issue and a little bit of a risk that I do find a little uncomfortable.
Yeah.
However, you don't necessarily need to actually invest in the US if you're participating in the US markets.
Right.
They have, you know, it's the most dynamic financial market in the world. So you can use ETFs, ADRs, and other products to actually reduce your actual exposure to the US while trading on their rails,
Right.
which has a lot of liquidity. So I find it fascinating. I think that relative relationship between Australia and between the USD and New Zealand is very challenging because currently New Zealand doesn't really have an issue. Not an issue. It doesn't really have a solution for changing this trend.
Yeah, and I think after today's OCR announcement, New Zealand dollar will drop a little bit further.
I mean...
Do you think that too?
I mean, that's the rational choice. That's the rational observation you would see, especially as the US were not happy to cut.
Yeah.
The Fed didn't want to cut, they were forced to. Whereas we're in a situation where they might do 50.
Yeah.
If they do 50, you would expect the dollar to get crushed.
Yes.
Right? Like you would really see that be a possibility.
Yep.
We obviously don't know because, you know, sometimes you could see the 25 basis point cut and actually it could get stronger.
Yes.
So I think around the margins of the move, right? A lot of people put a lot of credence on the day, but it's actually the long-term trends and the dynamics, that kind of Buffett approach of, well, what's the actual fundamentals that are going on? What's the driver for over the last 12 months us to lose 5-point-something% in value versus the US dollar, which is also losing value against equities, ETFs, property, gold, etc.
Yeah.
So that's our issue, and you see that we're ahead of the game in the cycle.
Yes. Yep.
So I think we're much lower in the cycle because we didn't have some of the tailwinds that Australia, US, the UK, even to a degree, but they're in a terrible spot.
Yes.
Have, because, you know, if you notice, Australian property market and the US property market has not dropped and even the UK market has not dropped like New Zealand has.
Oh, absolutely. It's funny. Like we were in New York in June, so about a couple of months ago. If you go to any shopping mall here, they're like almost dead quiet, right? Properties dropping, restaurants are closing, and all that stuff. Like you go to New York, you go to Boston. Everything is so full. People don't really worry about money. You go to any shopping mall, you go to any restaurant, everything is so full. Is it like because the economy is strong, or is it something else?
Well, you have more levers in the economy, and you have more throughput. Right, we're a country on the edge of the world that exports things and exports atoms, not bits.
Yes.
Right. So you have to play to your advantages. So we have to work out how we actually ultimately, like the pie for property doesn't necessarily need to get smaller on a dollar amount basis, but the relative percentage of allocation and of productive output here needs to reduce.
Correct. Yeah.
So like put kind of how people price property aside, it's actually, do we want to create an environment where we have other levers to pull when interest rates change that can support that interest rate change? Because you also had the dynamic of so many business owners having leveraged their business through their equity in their property.
Correct.
Which further deteriorated profits. So you're getting destroyed on the currency and you're paying a high cost to service a lot of debt that's tied to your home, but also your business relies on it. So it's like a double whammy.
Yeah, we just can't wait for another rate cut. But then I think we're in a pretty safe sort of a territory now.
Yeah, so from a cost to service, in a pretty good state, like you say. And I think kind of how much more can you cut without really affecting the currency?
Exactly.
So you kind of, this is as good as,
It should be.
this is as good as you can say without saying that you're borderline being like you're being irresponsible.
Correct.
Yeah, because we do have a natural uptick in inflation happening here and in the US. And the more we cut and the more they pause, the worse it gets for us, and the further our relative wealth falls behind the rest of the world.
Correct.
Which is a big concern of mine.
Oh, absolutely. Yeah, I mean, even if you look at the interest rates, like how they have come down in the last, say, 12 to 18 months, we are probably 40%, like paying 40% less compared to the peak about 18 months ago.
Yeah.
It's quite a bit. But then I think people don't realize that the whole cycle, it takes about 12 to 18 months for people to realize the interest rate cuts or increases. So hopefully by next 6 months or 12 months, you might see something happening in the economy. What do you think? Like, do you think the economy might get better in the next 6 months?
I think we're starting to see some shoots of that happening. It seems like productivity is increasing and people's willingness to do a couple of things and do that expenditure that they need, do that R&D, do that business transformation, make that investment. You're seeing it more. So that's natural. I think that, because it is such a trough here specifically, now the thing is the pain hasn't been seen in Australia and the US.
Yes.
So that will create some shocks that may hinder us along our way to recovery.
Yes.
But at the end of the day, we need to think about, okay, from a first principles perspective, how do we create more productive businesses that can compete here and in a dynamic local economy, but also can export to other dynamic economies.
Yes.
Because that's ultimately going to improve us as a country, improve our standard of living, improve our ability to adjust to a kind of global phenomena when it comes to entrenched inflation, right?
Yes.
Which I think you definitely can't get away from the fact that the US is on the edge of a kind of a point in time where they can't reverse their fiscal issues.
Yeah, so it's like, I think they were supposed to have like only a 1 trillion worth of a debt, but they got 37 trillion now.
That's right.
Yeah. So I've also heard rumors like they might bring Bitcoin as like, the new gold standard. Do you think that's happening?
I think from a political perspective, what we're seeing Trump come in and, honestly, I think we'll retroactively look at this as arguably the biggest grift in history.
Yep.
In terms of, kind of conflicted and misaligned interests that are, shifting how power is kind of held.
Yes.
Through currency rails, like you say, through cryptocurrency and Bitcoin and other different kind of disruptions and changes to legislation that are supporting that are ultimately backed by, wealthy Silicon Valley individuals and funds.
Yeah.
So you're seeing a power shift. I call it the shift from the kind of Rothschilds to the tech bros.
Yes.
And that's really what we're seeing. And I think that it makes everything quite blurry because you don't really know what you own, because you're not really sure what a dollar's worth. Therefore, you're not really sure what any asset is worth. Obviously, outside of stocks and companies where they have an income and they have IP and they have customers, and they provide a valuable service and a valuable piece of productivity to the market, something like a gold or a Bitcoin is really speculation.
Yes.
And a store of value through, in the case of gold, what you can use gold for, the utility side, but also the perceived store of value and the belief. Same with Bitcoin as well, and how the Bitcoin is a decentralized ledger of record for the transfer of value, which is not controlled by any individual institution and is completely auditable and public, right?
Yes.
So that's really interesting.
Yep.
Because the trust in the market has been eroded so much around institutions and governments, it has now worked, and the belief has increased and increased and increased.
Yeah, so I'm always skeptical. Like I don't know. Like I always wonder, like what can stop the government to control your wallet, right? Like how you have crypto.
They could physically take the wallets off of you. They could find every node and they could destroy it so that the blockchain stops running.
Yes.
Obviously, when you turn the blockchain back on, it's going to just run again. Right. So even if the government went and they knocked out all of the nodes and all the miners and they stole everyone's keys. If somehow miners are able to mine again and people get able to get access to their wallets and their phrases, then the system would come up again.
Wow.
Right? So that's super interesting, and I only just that question kind of prompted that. So I find it fascinating.
Yes.
Right? I find the whole concept of decentralized equity ownership very interesting. It's just and it's been very much embraced by institutions and governments now.
Yeah, because obviously governments have to control that, because otherwise there will be no government, because everyone's got their own way of doing stuff.
I mean, I think it's definitely trying to work out how you gain influence, and you can gain influence through Bitcoin ownership. You actually gain influence on the network.
Yes.
So there is a strategical advantage to it, or a strategical play there. But yeah, I mean, I'm pretty much putting this all down to just a kind of disenfranchised zeitgeist in the traditional institutions and governments, and a fight against that. Nice. And it seems to me like Trump and his administration and his network seem to be profiteering from that opportunity.
Yep. Do you have any advice or any cautionary steps that people can take in this market? Because obviously it's pretty volatile, and I hear a lot that this is all AI bubble, why the stock market is going up. It might be way worse than .com bubble, that sort of thing. Like, where do you think, what if I'm a brand new investor and I'm investing in the stock market, what should I be worried about, or what should I be careful about?
It's a really good question, right? And I guess it always comes down to what game are you playing. And when people ask me questions, and obviously I'm not a financial advisor, not giving financial advice to people, but what I say when people say, they kind of talk about investing. I've been investing for many, many years now. I've ran multiple startups, had an exit, so I've kind of been around financial products and financial markets for quite some time now, and seen a lot, and I'm fascinated by history. So I've read a lot. And I first go, know what game you're playing.
Yes.
Because that impacts everything. And what I'd say about investing in equities and trying to, let's talk about the game you play. Let's take trading to the side. Say, look, if you're trading and you're able to speculate and you're able to profiteer and you have an edge, it's incumbent that you have an edge. Otherwise, you're just lucky in gambling.
Yeah.
If you have an edge, then fine. But it's one of the hardest and most competitive things in the world. And people mix being a good trader with I'm buying stocks in a good market.
Yeah.
Okay? So in a good market, correlation tends to go towards 1, and in a bad market, correlation goes towards 1.
Yes.
So that means that if there's a bad market, it's likely that everything is dropping. You might have some relative outperformance, but, even gold, if the equity market sold off dramatically, you would have liquidations in gold, and you have basically trickle-on effects. So assets tend to kind of correlate in high volatility moments.
Right.
And in a good market, you're buying into a rising tide, right?
Right.
If you are index investing, or you're using passive funds to do that, then the game, it seems to me like Bogle from Vanguard implemented was you're trying to outrun inflation. Yes. You're actually trying to outrun the devaluation of currency.
Right.
Okay, and you're buying a large group of productive assets.
Yes.
So that was kind of that's where it kind of started. And index investing has evolved into thematic kind of tilts, into, you know, how people have decided to allocate around endowments. And the game has got a little bit more customizable.
Yes.
And then you have, do you want to own a business?
Yep.
And do you want to own a group of individual equities? Because if you do, you get some tax benefits, you don't pay management fees, and you get to own something for the long term. You have ownership in that. You have a claim on that as a shareholder. So I think that you have to, one thing I would say is that if a company has a lot of debt, it has a tail risk associated with it.
Yes.
So wherever you introduce leverage, which is inherent in property, you are creating a situation where you may not be able to continue.
Yes.
So, you know, for me personally, I don't invest in banks because banks have a tail risk associated with them. You know, look at what happened to Silicon Valley Bank, look at what happened to Credit Suisse, where they can just kind of very quickly disappear.
Yes.
So for me personally, I don't like the idea of buying an equity where overnight they can stop playing the game. So for me personally, I like to look at equities where I am interested in what they do. I have some sort of understanding of what they're doing, and I'm curious and trying to learn as much as I can about those individual equities.
Nice.
And for me personally, I try and stay away from anything that is leveraged from an equity ownership perspective, because I don't want to hold that risk. Another one would be like biotech companies, right?
Yes.
Quantum computing companies right now.
Yeah.
Any company that's pre-revenue and is either diluting themselves or holds a lot of debt where they have to kind of make payments. Those two things create situations where it can go to zero.
Right. See, let's say someone brand new comes into this and then they want to buy some shares of, say, Sharesies or Hatch or anywhere. Like, what's the easiest way to figure out, like, you know, if you're looking at just different companies, like what sort of a ratio, what do they need to focus on? How do you know it's a good company or not a good company without going too much into details?
Yeah, I mean, price to earnings ratio is quite strong. Revenue growth, anything that you would look at your business that you work at, right? If you work at a retail store and you know that after the last 6 months the revenue's been increasing, that's good, right?
Yes.
You look at your sales, they're increasing. Your price to your earnings, the lower that is, the more of a theoretical bargain that you get. But what we've seen in the last 20 odd years is momentum stocks that are compounding their revenue very quickly have almost always been expensive.
Yes.
So one thing to do would be I would say, is go to your KiwiSaver, look into the KiwiSaver, and work out what your KiwiSaver owns. Just that. Just, you are in a KiwiSaver, everyone's almost forced to be in a KiwiSaver. You're putting something into your KiwiSaver every time you get paid. Go and see what is in it. Because you could actually recreate it, most likely, in Acuity and pay zero management fees.
Oh, wow.
Right? That's and the same with shares as well. Our platform's built for being able to create strategies for dollar cost averaging.
Okay.
So basically self-directed kind of baskets of assets that, from a first principles perspective, you know, they own the same assets as your KiwiSaver if you created it that way. So,
but you have access to it, right?
Exactly. But what I think is an interesting exercise, just even if you're not even thinking about investing, is go and see what you're invested in. What is the thing that your KiwiSaver actually owns?
Yes.
Because you own that. You own a portion of that. You're a beneficiary of that.
Yes. Okay.
So I think that's the best first step.
That is good. Yeah, awesome, that's good. Thank you.
Well, thanks for coming on the pod. I've really enjoyed it. It's been a great chat.
Thank you. Likewise. Cheers.
Thanks.